The narrative on Wall Street is changing, and Cathie Wood is once again leading the charge with a bold and contrarian vision. While many investors remain fixated on short-term recession risks, inflation noise, and rate uncertainty, Cathie is calling for something far more transformational, a productivity-driven economic boom unlike anything we've seen since the 1990s. In her words, we're entering a rolling recovery, not a slowdown. And the engine of that recovery? Innovation, powered by artificial intelligence, robotics, energy storage, and genomic breakthroughs. In a world where the Fed is holding rates high, inflation is cooling, and economic data is mixed at best, this forecast cuts through the noise. Cathie Wood isn't just calling for growth. She's arguing that technological innovation is about to overwhelm traditional macro headwinds. Her thesis isn't rooted in hope. It's backed by structural shifts in the economy, declining costs of computation, the rise of autonomous platforms, and the collapse of legacy business models in favor of AI-native efficiency. This is not just optimism, it's conviction. And that conviction is reflected in the stocks she's been buying. While others de-risk and rotate into defensives, Cathie is doubling down on disruption. In this video, we'll break down 3 high-conviction names from ARK's portfolio that she's recently added to. These aren't just speculative moonshots. They're companies positioned to lead in a new economic era where innovation isn't cyclical, it's exponential. First on the list is Advanced Micro Devices Inc., ticker symbol AMD, a company that just received a seismic endorsement from none other than OpenAI. That's right, Sam Altman's OpenAI is now partnering with AMD to co-develop AI chips optimized for large language models, a move that could dramatically shift the balance of power in the GPU market. For years, NVIDIA has dominated the AI chip space, but this collaboration signals that AMD is not just catching up, it's starting to compete toe-to-toe at the frontier of artificial intelligence. At the heart of AMD's strategy is the MI400 and MI450 series, high-performance GPUs built for extreme inference workloads. And it doesn't stop there. AMD is rolling out its Helios rack-scale AI infrastructure, massive, high-margin server units equipped with 72 MI400 processors. These are not just chips. They are full-stack, enterprise-scale solutions designed to challenge NVIDIA's Rubin platform head-on. Combine that with a 57% year-over-year growth in AMD's data center sales, and you have a company with serious momentum. What makes this even more compelling is the macro backdrop. As the AI revolution accelerates, data centers are scrambling for alternatives to NVIDIA's supply-constrained systems. AMD is stepping in with scale, speed, and now, thanks to OpenAI, credibility. This partnership is more than symbolic. It tells the market that AMD is a trusted player at the highest level of AI development. And as AMD ramps production and expands Helios deployments in 2026, many analysts expect substantial operating profit upside. Cathie Wood clearly sees what the broader market might be missing. Her ARK funds just loaded up on AMD across 3 different ETFs, signaling high conviction in the company's AI trajectory. In an innovation-led recovery where AI infrastructure is the backbone, AMD is positioning itself not as a follower, but as a co-architect of the future. Next up is SoFi Technologies Inc., ticker symbol SOFI, a company Cathie Wood is clearly watching closely. In fact, ARK Invest just made significant buys across both ARK-F and ARK-K, signaling renewed confidence in this disruptive fintech player. While the broader financial sector grapples with interest rate pressures and macro uncertainty, SoFi is emerging as a new generation financial platform built for long-term growth and resilience. At its core, SoFi offers a full-suite digital bank, from student loans and personal lending to investing, credit cards, and checking accounts, all delivered via a sleek cloud-native app. But SoFi isn't just another challenger bank. Its technology subsidiaries, Galileo and Technisys, power the infrastructure for dozens of other fintechs and financial institutions, making SoFi both a consumer brand and a behind-the-scenes operator in the global banking stack. What truly sets SoFi apart is its ongoing transformation from a loan-dependent business to a fee-based revenue machine. That means it's becoming less sensitive to interest rate swings and macro volatility. Over the past 6 years, the company has scaled its revenue nearly 6-fold, reaching over $2.6 billion in 2024. Crucially, it turned profitable last year, a major milestone for a company still in hypergrowth mode. Its member and product growth continue to surge, with each customer using more services on average, evidence of a sticky and expanding ecosystem. And while macro headwinds remain, including high interest rates and some pressure on consumer credit, SoFi is navigating the environment better than many legacy banks. It's capital light, tech-driven, and still gaining share. Cathie Wood's recent buys suggest she sees what many on Wall Street are missing: a scalable, software-based banking platform that could benefit massively from an eventual rate cut cycle and the continued digitization of financial services. For investors looking beyond short-term volatility, SoFi could be one of the most compelling long-term growth stories in fintech. And finally, we have Tesla Inc., ticker symbol TSLA, Cathie Wood's top holding, and one she continues to buy aggressively across multiple ARK ETFs, even in the face of market volatility. While many investors are trimming their AI exposure or rotating into safer plays, Cathie is doubling down on what she believes is the most transformational company of our time. And it's hard to argue otherwise. Tesla isn't just an EV company, it's an innovation engine that's redefining autonomy, energy, and robotics, all under one visionary roof. Despite a challenging 2025 with contracting earnings and political noise, the real Tesla story is just beginning. The company is already rolling out its limited cybercab fleet in Austin, with plans to scale rapidly. Autonomy, once a distant vision, is becoming tangible, and it's starting to reshape Tesla's identity. The launch of an affordable mass-market model and the expected margin rebound from improved production efficiency are just the beginning. What truly excites long-term investors is Tesla's parallel push into humanoid robotics through Optimus, an initiative Goldman Sachs recently projected could grow into a $38 billion market by 2035. Tesla thrives on controversy. Elon Musk's public persona may be polarizing, but for Tesla, it's a brand amplifier. Like the Beatles once profited from albums bought just to be burned, Tesla has become anti-fragile, gaining strength from scrutiny, not in spite of it. This is a company with one of the strongest brands on earth, led by a founder who understands how to merge ambition with execution. Cathie Wood sees Tesla not as a car company, but as a platform for exponential innovation. She's positioning for the next wave of growth in AI, autonomy, and robotics, and Tesla is at the center of it. In a future driven by software, energy, and intelligence, Tesla could be the defining force. Cathie Wood isn't just buying stocks, she's placing high-conviction bets on the future. From AMD's AI breakthrough with OpenAI, to SoFi's reinvention of modern banking, and Tesla's bold leap into autonomy and robotics, each of these companies represents a key pillar in the innovation-driven economy she envisions. While the market focuses on short-term noise, Cathie is skating to where the puck is going, toward exponential growth powered by disruptive technology. If you believe that the next decade will be defined by AI, digital finance, and autonomous platforms, these aren't just companies to watch, they're companies to understand deeply. Thanks for watching, and don't forget to like, subscribe, and hit the bell so you don't miss our next deep dive into the stocks shaping tomorrow.